So in the last video, I went over the construction of some short delta risk reversals, and I was fortunate enough to have a favorable move with that type of position on this morning. And I thought it would be fitting to make a follow-up video showing the specific adjustments that I did to the original position, which again was short delta risk reversal. So let's take a look and see what happens. Okay, so in the last video I mentioned creating a short delta risk reversal, and I mentioned the reasons why I was interested in possibly doing it, and I did pull it off. I'll have the video link attached somewhere on the screen. But anyway, let's go through some of the details of the trade. Let's see what we did here. Let me run through the components of the trade. And as I mentioned, I wanted to pull off a short delta risk reversal. So I was selling. I was interested in selling a call spread, not a money call spread, and I did at 72.50, 50.60, and then I went down to the 70 handle and I bought a put spread, the 50.30. That package was done for a double 0.55, and that took place at 6:46 in the morning. So let's take a quick peek at the chart. And let me go to, see, these are half-hour candles. Okay, so 6:30, the 6:30 candle, this is 6:30 to 7 a.m. See that the market opened, and again, this is emini, at 52.25 in the 71 handle, rallied as high as 71. So the high of this candle was 71.71, with the low being a touch under the open at 49 in the orders, and the close 59 in the orders. All right, after that point, for the next few bars, there was a rally. It rallied, higher highs, higher lows, and that continued for the next hour and a half. But the trade that I placed, and this was for the, I still have part of it on, it's for the April 28th expiry, went out in the 72 handle and went 10 wide on a 50.60. Okay, and then the other side of the trade was went to the 70 handle, and I bought the 50.30. Let me double check. Yes. Okay. So I was able to pull that off for a small debit of double 0.55. So basically, with the multiplier, just a little more than $2,500 or $25 for that trade. Again, 0.55 is the multiplicand, and for this options contract, the multiplier is 50. Okay, so what we're looking for here with this type of setup is obviously we want the market to head lower, and as I briefly mentioned in the previous video where I was talking about creating this structure, what really interested me in getting this trade done was that, again, I'm not a technical analyst. I don't care about that stuff, but I will look at charts every now and then for timing purposes. Whether that's helpful or hurtful, I really don't know, but with me, it's more out of habit than anything else. All right, so I'm not going to disparage technical analysis. What I am saying is that it's not something that I use, and I think the reasons for that are implied, so infer what you will. Anyway, I was interested in selling in this general area that I mentioned in the previous video. So somewhere between, let's just call it 75, 85, 70, 85. In that area, I was interested. So I did, and I created a short delta risk reversal. Now, expanding this chart a bit, we can see that I took a break sometime around, I don't know, 9, 10 o'clock, something like that. When I came back from my break, notice here this white candle that I'm hovering over. There was a considerable drop in the market. I still don't know what it was about, and as this kind of thing is happening, I really don't care. All I know is that something's going on, and it might be time for me to make an adjustment. In the old days, the days of yore, on the floor, whenever there was dramatic price movement, we never had a clue why. We were the last people to know, but we were basically one of the first people to also know that something was going on strictly based on price and tape reading. One vivid example of that, I have a vivid memory of, it was probably September of 1998, and I was about to walk into the Dow pit at the Board of Trade and get short Dow futures. And as I stepped into the pit, get back to my spot, the market suddenly jumped 50 points out of nowhere. And I was very lucky that I did not get short, because the next thing you know, it was 100 higher, 200 higher. I think it went 500, 600 higher that day. There was a surprise rate cut by the Fed, and it was actually a day before options expired, and this happened at 2:30 in the afternoon. And the bond pit closes at 2. Bond options stop trading at 2. This is Central Time, Chicago. So a lot of options that were supposed to go out worthless, they got jacked. And I'm not going to name names, but I know some people who just got absolutely destroyed there. And anyway, that was something that happened, came out of nowhere. We did find out a few minutes after it happened, that because we do have a newswire service all over the floor, and then people noticed, oh shit, they cut rates, and boom, next thing you know, the Dow was 600 higher. I don't remember if it was in the 10,000s or whatever back then, probably 9,000 something, but it was a dramatic rally. And poor guys who had bond options that were about to expire worthless the next day, they got absolutely hosed. Anyway, back to the present. Markets were dropping, prices were dropping rapidly at this point in time. So this is roughly between 10 and 10:30, and bonds also took a big drop. That's probably why I mentioned bond story. Now that I think about it, at the time I was, earlier this morning, I had a small bond position on a short delta risk reversal in bonds, and I made adjustments to that too. I do remember seeing 16 in the 13 handle, so they got as low as 113.16, and I think at around the time I left for my break to take a little walk, 9 in the morning today, they were trading around, I want to say 114.08 ish, somewhere around there, 114.08, 9, 10, something like that. So they dropped close to a point as the minis were dropping. Okay, so back to this trade. At that point, I'm able to make adjustments because I have a very favorable move, which again, I want to emphasize, I don't know where the market's going to go, but it's obvious if you have something on whether a move is favorable or unfavorable. So time to adjust. This was the first adjustment that I made. Note here, and I'll go over the specifics in a minute. I went to my call spread and I decided to close it down. And then along with that, this was a package. I closed down the call spread and I sold a 10 wide put spread. And note that as part of the original package, I have a 20 wide put spread on. So the call spread is 10, the put spread is 20. And as I was adjusting, I decided to do 10 wide put spread. So I had 20 in width to play with, and I butterflied half of it. And the reason for that is at the time the market was probably down 50, 60 points, maybe a touch more. And I thought it would be best to harvest some profits on half of the 20 wide put spread and play with the other half to see how the market was going to respond. So I was thinking, if the market drops below 100, so if it's 100 lower on the day, can we see down 150? Can we see down 200? So I wanted to leave some room to play with, and I did. And note the time here, the timestamp. This was done at 10:25 a.m. and the next trade was done, the next adjustment was done at 10:51 a.m. So getting back to this trade at 10:25 a.m., I closed down the call spread. I didn't want to butterfly it off. I decided to just close it down. And I sold in the 70 handle a 20-30 put spread to create a butterfly. That brought in a 75-cent credit. The next adjustment brought in a $1.75 credit. So let's take a look at what I did here. Let me expand this. Okay, so originally we're going to go with 1, 2, 3, 4 parts to the original trade. So I'm going to eliminate that. And here's what the original trade looks like. So risk to the upside because I'm short a call spread, the 50-60. And the profit zone, the major profit zone, the 10 starts at 70.50, and the upper end of this spread is at 70.30. So we got a 10 wide call spread and a 20 wide put spread done for a small debit. All right, next move, I bring in a little money by creating a butterfly, and what I did was, let me get rid of this. So I covered the call spread, closed it down. That cost me, looks like we're going to call it 62.5, 50, yeah, 62.5, 0.625. And then I created a butterfly by selling a put spread, the 20-30, and that brought in a buck. So at this point, I have a small credit in the trade, and it looks like this. All of the upside risk was eliminated by shutting down the call spread. Now I have a butterfly here that's 10 wide. The original put spread is 70.30, and I sold the 20.30, and I still have room to play with here. Note, keep in mind that the apex point, the profit zones, we have to cut them in half because they're using 100 as a multiplier here. And the multiplier in the options for emini is 50. But anyway, this is the basic structure at this point. All right, let's take a quick peek at the chart. And at I did this trade at 10:25 a.m. So note that the low during this half-hour candle was 71.15 half. Okay, from a high of, let's call it 81.50. So we had a drop of 66 handles from the high at, we'll call it sometime before, sometime between 8:30 and 9. And then we had a sharp drop in this half-hour bar. Okay, the next adjustment was done at, remember, the original put spread was 20 wide, and I butterflied off 10 of it. And I decided to use the other 10 to bring in more of a credit, buck in the orders, 1.75. and I went down to the 69 handle, and I sold a 65.75 put spread. So visual of that is, let me go out here, and here we are. Okay, so I sold 65.75 to bring in more of a credit. Now the current structure looks like this. So remember, I had a call spread as the original, as part of the original package. Shut it down and butterflied 10 of the 20 wide put spread. So we have a 50-30. You can think of that as one put spread. And then here's another. I sold the 20-30, so that's a 10 wide versus a 20 wide. And I decided to sell the other 10 at 75.65. So note that the profit tent here is between 7,050 and 6,965. So I have an 85 wide range here on a trade that expires next Tuesday. This is April the 28th expiry, with an apex of we're going to have to divide this by half. So it's going to be a little more than 1,000 plus the credit. It's basically an $1,100 apex here, and $600 apex that flat lines between 7,030 and 69.75. Also note that no matter what happens, either way, anywhere outside of this profit tent between 69.65 and 7,050, I'm going to make at least a touch under $100. And so on the analysis tab here, we're basically going to see the same thing, except for it doesn't keep track of the option, the adjustments that I make. So it's going to look slightly different. There we go. Okay. So it's close to what we're seeing on this option creator page here, but it's off by a little. However, it does account for the gist of it, that now the trade, the worst case scenario is I make a touch under $100 minus commissions and exchange fees, and I have the apex there, and I have a nice flat line here, total of 85 handles of width for next Tuesday's expiry. All right, so these are all possible adjustments. Things do not have to be done this way at all. You could just close out. You could have closed out the beginning package at a time that, whatever time you consider favorable. But I like to play around with the pieces, and you can see here that I waited 26 minutes to harvest the remainder of the put spread that I had, which again was originally 20 wide. Okay, what's going to happen tomorrow? Who knows? I have no idea right now. Market's up marginally. Minis are up 2. Bonds are down a couple ticks. Bitcoin, and I have an IBIT position, but I'm not worried about that in this account. And oil is up. The June contract is up a smidge, 79 cents higher. Okay, hope that wasn't too long. Thank you if you hung in there, and I hope that was helpful. Many creative ways to work with your positions and make adjustments. And I do want to mention real quick that unlike the SPOOs, these contracts will settle to futures. So if you're approaching expiry, make sure, unless you want a futures position, make sure you close out or close down anything that might get assigned. Okay, thanks for tuning in. I'll catch you guys next time.